What's up, guys? This is Rey-Jay back with another video. And in this one, I want to give you guys a very quick update about the markets. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30, and the offer ends at the end of March. Anyways, as far as the market's going, we're seeing some buyers who are stepping in who are trying to push us higher, but SPY has not been able to break past 565 yet, and we've been stuck in a range so far between 565 and basically the pre-market low, all the way down here around that like 560, 561 area. So we're range bound technically, but there is potential for upside looking at the setup. Now, whether or not this pans out is not just based off technical analysis, though. It has to be based off what the Fed tells us, and that's why I can't make any promises. So, what do I mean by this? Well, the thing worth mentioning is that when you look at our data, right now, the market is just kind of shuffling, doing its thing, but there's going to be a very big reaction once this data comes out. So, at 2 p.m. Eastern Standard Time, we have the interest rate decision coming out. There's currently a 99% chance the Fed is going to keep rates the same, so that shouldn't really be too impactful. But I think what's going to affect us more is going to be the FOMC economic projections at 2 p.m. Eastern Standard Time in just a couple of hours. Why is this so important? It's going to give us more insights about what the Fed is thinking about interest rates, where they see them 1 year out, 2 years out, and etc. And this is going to have a big effect on businesses and such. Now, with the tariffs coming out and all these different factors, the Fed is not as inclined to cut as much. They're kind of just waiting, at least as time goes on. But excuse me, with this going on, we'll have to see how the market responds. If the Fed expects more cuts than expected from before, that could help the market launch higher. If the Fed keeps everything the same, which is very probable, it might not affect the market too much. The market may just have a very nuanced reaction. And if they expect to hold rates higher for longer, and they don't really expect as many cuts, if we end up seeing the rates go up a little bit, that's going to be a little bearish for the markets. So please be careful, guys. Whatever this data causes is going to be very big. And I just want to say that I can't truly predict what's going to happen. It's due to, uncertainty. So be careful as a trader. Then we have Jerome Powell's speech at 2:30. So get ready for all of that. So my point in saying all this is that there's a lot of things we don't truly know. We don't know if the market's going to launch higher. Is this a fake move? Are we about to dump? I don't truly know what's going to happen. That's why my move is just to be very unbiased and to be very patient. And as a day trader, I'm just going to be managing risks very well. So if you're a bull, you want to see SPY essentially eventually break past 569. If that breaks, 575 is coming. If you're a bear, you want to see us essentially lose 555. If that fails us, we could be dumping much lower. We're in the middle. There's a possible inverse head and shoulders like structure, but nothing is guaranteed in this market. So we'll see what the data leads to. No promises can be made, but we'll see just to be safe. On the triple Q, I want to see us get back above at least 485 to really start pushing to break the high from Monday. If we break that, we're going to be looking for an attempt to get back up to the 490s. If we lose 474, we're looking for that gap fill to 470 all the way down here. Could go either way, so we'll see if this is a fake move and we just get a rejection, or if we're about to see this market launch higher. It depends on Jerome Powell and the Fed. For the Russell 2000, we have a left shoulder ahead and then a right shoulder. We need to break past 205.5. If that breaks, we're going up to 208. If we end up losing 203, we're looking for a dump back down to 201. So we're stuck in the middle. Give this the time it needs. For ES, we have a left shoulder ahead and then a right shoulder. If we end up breaking past 57.25, we're looking for 58 or 57.50 is our next potential target, then 5800. If we end up losing 56.85, we could be dipping even lower. So far, with this inverse head and shoulders, we do have a lot more potential to push. I think that this setup could play out, but it's not a guarantee because it depends on FOMC. So the setup is technically a bit more bullish, but it depends on FOMC just to be safe. NQ also has a double bottom, kind of like a slanted inverse head and shoulders, but nothing is guaranteed yet. We need to see this thing break past 20,000 and hold it to run more. If we end up rejecting, if we end up losing like 19,800, we have to be dipping a little bit lower, all the way back down to 19,600. So we'll have to see how it goes. Bitcoin is technically on an uptrend. I want to see us continue to push for 85,000 plus. If we end up losing 82,000, we could turn back down, but I do think this is looking a little bit more bullish. So we'll see just to be safe. Nvidia is looking so. I do see an inverse head and shoulders, but I need to see this thing break and hold above 117, then a 120 to really keep going. If we end up losing this 112 area, we could be dipping lower. For Tesla, we have a nice looking structure. I need to see us break 237. If that breaks, we're looking for essentially 245. If we end up losing 222, we could turn back down, but we just have to see just to be safe. So for Tesla, if we can't hold 230, look for the low to be retested at 222. If that fails us, we're looking for 215. Break past 237, we could try to bounce back up for that 247 area, but it depends. So please be very, very careful nonetheless. Apple's testing 215. We need to break and hold above that to get back up above 220. If we reject here, we could be dipping back down to like 212. So we'll see just to be safe. For Coinbase, the chart is looking so right now. We're kind of in the middle. I would like to see this break past 191 to push higher. If that breaks, we're looking for 197. If we turn back down, we end up losing support. We have the support to watch for 181, so it could go either way. For Amazon, we're kind of trading sideways. We need to break past 195.5 to bounce. If we lose 191, we could turn back down, so keep that in mind. Meta is on a bit of a downtrend. We need to get back above 597 to push. If not, we could be continuing this downtrend to about 570 flat. Still looks kind of lackluster. I want to see Microsoft break 388s to be bullish. Otherwise, we're kind of stuck in the middle. And then last but not least, Google is kind of stuck in between these levels. I want to see 165.7 break to push higher as well. So we're still stuck in the middle. The VIX is rejecting here. It's technically on a downtrend. But it depends on the reaction from the Fed. Does the Fed cause the market to get a rug pull? Do we see this break out and get back above 22.5? If that happens, that would be a bearish signal for the markets. If it's the opposite and this continues to fall towards like 19.6 or below, that would be bullish. It all depends, guys. Does the VIX lose the 19s to be bearish, or do we break past the 22s to be more bullish? So we'll see. Anything could really happen at this point, so you want to be very careful. So with that being said, guys, I gave you guys the information. I'm letting you know there's going to be a big catalyst coming out, and we can't truly predict what the move is going to be. The setup is technically a little bit more bullish, but nothing is guaranteed because it depends on the Fed. So it's all going to be affected by the Fed. What's happening at 2 p.m. is going to be very, very big. So if you're holding anything overnight, if you're holding anything and you plan on swinging, please be careful. I just want to give you guys a warning about this. However you want to play this, if you want to bet on upside or downside, it's up to you. I have lots of good friends who prefer just not trading during FOMC because it's very volatile and sometimes it's very unpredictable. So everyone has a different opinion. You guys can do whatever you want to do. I'm just here to give you guys an update just to help you guys out. Anyways, that is it for this video. Please have a very, very fantastic rest of your day. I'll give you guys another update very, very soon. But until then, get ready for some big volatility once we get the FOMC economic projections. Until then, have a good one, guys, and peace out.